Okay guys, let's get into understanding risk and money management. Of course, this is a hugely important aspect of your trading. If you want to have any success, you need to make sure that you've got capital. If you're someone who has a car yard and you sell cars, if you've got no cars, well, you have no business. You've literally not got a car yard, you've just got a yard. And in trading, that's the same sort of thing. If you have no capital, you're just playing a video game. So it's absolutely of the utmost importance that we follow through with our money management, risk management, understand the difference between a couple of areas where risk comes in. Of course, when it comes to trading cryptocurrency especially, we do have third-party risk. We've got counterparty risk out there as well. And this is why I like to use margin trading accounts for the very simple purpose that if I'm using margin, I don't have to have as much Bitcoin or money in that particular account because I'm actually able to, with a smaller amount, manage a larger position size. This is one of the real true benefits of margin. It means that I can hold less on the platform, which means that my counterparty risk is substantially decreased. If I'm trading on spot markets alone, I've got to have more there to get the risk size that I wish to have. So that counterparty risk is something that we need to be very aware of. So trading with companies that have been around for a while, trading with companies that have been regulated or are regulated, or have good order systems. These are the sorts of things that I look for. And of course, what I do is I continue to update and let you guys know of what options become available as and when they do become available so that you guys know where to look. So keep your eyes out in the community and in the videos as well as they come through. So let's have a look at what we're actually looking at here when we talk about risk and reward ratios. Now the thing is that most new traders will focus on the reward. They're interested in how to make money. Often they want to get rich quick. You hear a lot of people in this space at the moment talking about margin and how bad it is and how destroying it is and wrecked and all this sort of stuff. In actual fact, the bottom line is it's just the lack of understanding, the lack of education and the lack of knowledge around how to use these tools. Now, I've been trading for 14 years now and I've been using leverage the entire time. So for me, it's not a scary thing because I understand it. Now, of course, you do need to have some tools to make sure you understand what you're doing. And I continue to work with these exchanges and try and work with these exchanges to make things much, much more simple for the end user as to how to manage risk. Now you will have access to a risk calculator there as well, so don't you need to worry about that. We have those tools available for you. Now, you do not want to focus on your rewards. Like I've said 1,000 times before, if you start to focus on making money, you probably won't. That's just the bottom line. This is what happens in trading quite frequently. I've done this before, 2000 and, oh goodness me, I might have been 9. I remember I'd done very well through 2008, 7-8, as the market had crashed. And I wasn't trading crypto at that time, of course, before Bitcoin was invented in 2009. And, I had a really good year. And one of my New Year's resolutions, I think one of my last New Year's resolutions, to be fair, was to say, look, I want to, this year's the year I'm going to make a lot of money, like a lot more money, right? And I was like, my consistency is there, my results are there, I've done very well. Now what I'm going to do is I'm going to increase my risk from 1% to 3% and really get it cranking. As you can imagine, very bad idea. I was focused on making money as opposed to following the process and managing my risk. In that month of January, I lost a lot because obviously something had clicked in my head or something changed, or the market has a very awesome way of humbling you when you get too big for your britches, so to speak. I got smashed and it took me till April to get that back. So I started off the year on a very negative note. I vowed never to do that again and just to focus on process. And since then I have done. So again, even if you are doing well, if you start to think about money, you will go backwards. I promise you that. It just happens. There are ways for which you can increase your account capital. Not a problem at all. But don't go too far into that, and especially not at the start. Good professional traders focus on risk. As a matter of fact, risk management is trading. If you're not managing your risk, you will not be around for very long at all. A couple of common questions to find out if somebody is not, trading well or thinking about what they should be, focusing on the process. When people ask this silly question, when moon, or when are we going to get a pump, it's because they haven't got an understanding of what goes on. There's someone who wants to just get rich quick. This has happened plenty of times in crypto, of course. It's happened many, 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 many times. But the bottom line is that if you're considering that, you're not bringing any skill, you're just bringing hope. And hope is not a strategy. Where to take profits? That's a good question. And when to take 1-to-1 and when to take 5-to-1. Now, in this particular marketplace, being cryptocurrency, I look to take 1-to-1 as a first target to minimize my risk, and then we get some mega moves. So for me, it's about making sure that I focus on those moves by minimizing my risk first and foremost. Asking these questions is fine. It certainly shows, especially this question here, that you are somebody who's brand new. Focus on keeping the money that you've got. Like I said, if you're a car salesperson, you've got a car yard and you've got no cars, all you have is a yard. Without capital, you've got nothing. As a trader, it's just a video game. You've got to keep your mindset correct. You've got to keep your money in the account, and having both of those together based on risk management will help both of those sides of it. We'll look at risk management and mental side of trading shortly. Your targets aren't as important as your risk, by the way. That's something I think is really important. Your profits will make themselves. Your profits are easy to manage because they'll take care of themselves, right? But what we've got to work on is what the minimum requirements are for our trading so that we don't take risks that are not worth the reward, if that makes sense. So we're going to aim for a 1-to-1 target. I'll show you what this looks like again in just a minute. This means that if you're going to risk, say, $600 on the position, there needs to be at least $600 of reward potentially available. When do you look for higher targets? Well, you've got to basically understand what's going on in the market. Now, you can definitely look for bigger moves, not a problem at all. And when I say look for them, it's more about letting them occur. Okay, but you've got to be looking at 1-to-1 at a minimum to minimize that risk. Look, you're going to get some mega moves. You really are. This market is absolutely incredible, and in all honesty, it can make someone who it might take you 3 to 4, 5 years to become a proficient full-time trader in other markets, depending on how much you start with, of course, and what your expenses are. But it took me 4 years to get to the point where I was actually consistent enough to consider leaving my job at the time to get into full-time trading. But I tell you what, I'm seeing this happen in record time in this market, and it's just because of the nature of the volatility. Now, it won't be there forever, but I think we've got quite a bit of time ahead of us to actually make some solid gains before we do see this market really blow out into the trillions and then slow down, a bit like .com did, okay? So just be patient. You don't know what's going to be a massive runner, so don't try and catch it. Just let it occur, but manage your risk at every step. So, every trade you're taking, you got to understand you might lose. It's a bottom line. Some of the best trades I've ever taken, as far as setups go, have been losing trades. Just because you've got a fantastic setup doesn't mean it's going to give you the outcome that you want. The market is completely random. What we're using is probability-based trading to give us an edge so that over a large sample set, we know that we're going to make money. We're trying to return on our risk. That's really important. So what do we need to know in that aspect? Well, when it comes to risk, first of all, we've just got to accept it. It's part of being in this business. It's part of being in every business. But every trade you take, you've got to remember, it could be a winner, it could be a loser. The market doesn't care about what you think. The market doesn't care about what you need. So you need to care about your risk. If you want to avoid risk, well, you've come this far on the course, so you better kill it now. You can't avoid it. You can manage it. Minimize and manage that risk. We want to reduce that risk to a point where we're comfortable, and then we want to convert that risk into reward so that we are making money. What are we considering when we're managing our money? Well, a stop loss. You should never, ever take a position without a stop loss if you're trading. If you are a hodler, fine, you can have a position without a stop. It's up to you as to what you do there. I can't stop you from doing anything, and I'm not going to try. If you're trading, however, everything must have a stop loss. It's a point at which you are taken out of the market. It's an order, and you can be asleep. You can be out elsewhere. You don't need to be sitting there watching that market. People say this, they say, oh, Craig, I don't use stop losses because I always get stopped out. That's because you're not a very good trader. No offense, it's just the truth. If you're always getting stopped out, it's because your stops are in the wrong place and you're not trading well. The stop, there's nothing wrong with the stop. It's to do with you. You're not trading very well, okay? Don't move your stops. Move them if you're trailing for profit, but don't fiddle with them. Don't go, oh, I'm about to get stopped out, I'll move it. It's not a good formula. Your reward risk ratio is there to decide what you wish to take from the trade, and this should be decided prior to getting into the position. So take out your pens right now, guys, and write this down. Plan your trade and trade your plan. Plan your trade and trade your plan. That is what we're saying here. Every decision needs to be made before the emotion of putting money into that market becomes a reality. If you're considering what to do when you're in the trade, chances are you're going to be swayed by whatever's going on in your head and on that chart at that moment in time. Take away all the guesswork, take away all the emotion, and focus on planning the trade out before you even get in.
The Trader Cobb Crypto Show, talking business in blockchain.